in fractional reserve banking.
Thank you, Madam Toastmaster, fellow Toastmasters, honored guests, and especially Southwest Florida Youth for Ron Paul, which is an organization I've recently been involved with and which inspired this talk. So we're going to talk about the magic of the Federal Reserve and fractional reserve banking. So what happens here is that the U.S. Treasury creates an IOU bond, and that's auctioned off to some of the big banks like J.P. Morgan Chase, Citigroup. Does any of these ring a bell from the 2008 financial crisis? They're the big ones. And then through a thing called open market operations, which is kind of a thinly veiled process that you can look it up online. Intellectuals would argue that it's much bigger than I'm saying right here. But the Fed buys up those IOUs, and then they issue more money to the Treasury after the bank already bought the IOU and issued money to the Treasury as well. So we see that the Treasury is creating money out of thin air here. Now we'll go more in depth if I had more time. But then what the Treasury does is they take that money and they give it to the government. And primarily what do we have here is we have a lot of social programs, a lot of welfare type programs, nanny state. We also have a lot of wars that don't have ambiguous titles and don't have any clear ending. We also have a lot of government agencies, which is maybe where some of the good stuff is in the roads, the education, etc. So then once that money is spent, that trickles down to the people who earned it. And then it goes to the bank. And, and there's a lot of cronyism going on there too, where corporations taking advantage of having lobbyists in Washington, etc. So then that bank, we're done with the Fed, which is kind of the magic, the monetary base, which is only 3 to 5% of the money was created out of thin air. But then we're going to create some more money out of thin air through the magic of fractional reserve banking, which means that the money's in the bank through the hard work of the people, and then it's loaned out. And then the people who take that money, they go and they spend it on a car or a house or a small business loan. And then when that money gets deposited in the other people's accounts, the bank loans that out, and then loans that out, loans that out. So the money multiplies quite a bit. And say that the reserve ratio was 10%, that means that for every dollar that was deposited, we had another $10 that's in circulation. So you see that the base money is anywhere between 3 to 5%. The money that we created is anywhere from 93 to 95%. So I call this kind of a twilight zone agreement, which means that I argue, and the Ron Paul campaign argues, that this only exists out of a kind of a collective social fabric that we've created. And that's really what I think is being exploited here if you really look deeply at it. And then on top of that, we're the ones who work for this money, so we see something that says Federal Reserve note on the note, and we assign it value because a lot of our hard work went into creating this value, this medium of exchange. And then on top of that, which is like the cruelest of cruel jokes, that money's taken through tax, goes to the IRS, then it goes back to the Treasury. So we see that this allows the system to continue. And make no mistake about it, that this system operates in a manner where it has to increase in size every year. So the debt gets bigger and bigger and bigger and bigger, and that's why we have a lot of talk about this $14 trillion debt that's currently brewing. So then you see on the flip side here, we have the monetary base, which is 3 to 5%. We see that this system can work for a while, and it has throughout history, where we have a type of fiat currency where it will, actually at first it will start off as a currency backed by gold or another valuable metal like silver, and then eventually it will go off that standard starting in 1944 with Bretton Woods, where it went to a fractional gold standard, and then in 1971 when Richard Nixon stated that we are going completely out the gold standard and we're going to be on a complete fiat currency, which means that the U.S. government backs the value of the note, and that's where the value comes from, because the U.S. government says so and the Federal Reserve says so. So we see that through that process that I described, that creates a sort of bubble-like system We saw that happen in 2008 officially with the banker bailouts and the financial crisis. And we see that in 2008, we had the base money was $825 billion. And in just a span of about 3 years, that's tripled. And in all seriousness here, we joke about this in the other class because, you know, it's worth mentioning, I think, but it's a very serious thing when you think that the Federal Reserve has tripled the money supply just there, and that corresponds to the M3, which is the total money supply, and this has hovered up around 15 trillion at its height, and it's recently dropped to 14 trillion, which means that some of these loans are being called in because that's how the bank makes money, is they charge interest on these loans and they kind of extend out, and then when the bubble bursts, like we saw with the mortgage crisis in 2008, it starts to pull back, and then you see a decrease in the money supply because that's how the money's being created. And it's the same thing with credit cards too. When you sign a credit card, you're putting that money out into circulation. That it had no value before you created it with a credit card. So we see that sort of trying to contract. And it seems very serious, and not a lot of us are talking about it yet. You know, Ron Paul still gets kind of ignored on the stage at the Republican primary. And I think it's for good reason. Because I think he's the only real candidate in the campaign talking about the issues that really matter. Because he wants to, of course, eliminate the wars and a lot of the social programs, and he wants to audit the Federal Reserve and eventually abolish it. So that's where I'm coming from there. I also have a personal story, which is when I studied economics in college, and there was a very cool rogue economist that I studied with, and I took 3 classes with him, and he backed the gold standard and kind of stood opposed to the Keynesian economists that were involved in, you know, supporting this system where the frequency of the money in circulation is really what's creating the value. You can see how that, I've kind of seen over the years how this opinion is suppressed. I think this is for good reason, because we have a lot wrapped up in this system that really deserves a discussion in this campaign. So I will just end by stating a couple of the sources, which would be goldsilver.com, Guide to Investing in Gold and Silver by Mike Maloney, and The Fed by Ron Paul. A lot of the speeches about Ron Paul, where he's kind of sparring with Ben Bernanke, the head of the Federal Reserve, on YouTube, which is very interesting to watch. And also the Creature from Jekyll Island by Edward Griffin, which is really fantastic. So I'll kind of end there, and I'll take, and Chris inspired me to take just one question. I know I went kind of fast, like always.
How do the credit cards, how does that, you said that it was the same type of problem, but you really didn't go into how that worked.
Yeah, again, once again, I apologize for going kind of fast. Yeah, the credit cards, they're doing the same thing, is they're banking on the interest, the debt, the collective debt that's being created by all of us. So the people who don't have any money, and then they put it on a credit card, and then they have that interest to pay off over time, that's how they're making their money. But once you get that credit card and you swipe something, that money's not officially backed by anything. It's just money that's been created and that you're going to pay the interest off on. Madam Toastmaster.